Hello friends, let us understand the 2020 stock market crash from the Indian stock market aspect. What is a crash? As per widely accepted definition, dip in stock market indices for more than 9% in 5 days is considered to be a crash. Why does crash happen? Crash may happen due to some indirect factors which are not directly related to market or some direct factors which directly affect the stock market. Indirect factors such as recession. Recession means decrease in demand of goods and services due to various factors. Political factors. Change in government, finance budget of the government are some of the political factors. A pandemic like coronavirus can affect the markets, which it did in 2020. Burst of any economic bubble. Direct factors like scam in the stock market like Harshad Mehta scam in India, financial results of the companies, change in management of the companies, NPAs of the banks. Let us see list of some major crashes and the reasons thereof. After the economic reforms of 1991, the first crash was in 1992, which was considered to be because of the Harshad Mehta scam. In 2004 again there was a crash due to fall of a strong NDA government and entry of a coalition UPA government in India. In 2007 and 2008 there was a long-standing correction in the markets. In 2007 the overall markets from January to December still stood positive, but however in 2008 the overall fall from January to December 2008 was around 55% in the stock market indices. In 2015, China's slowdown and the yuan devaluation are considered to be the factors behind the stock market fall globally and in India. In 2016, NPAs of the bank, global slowdown, low crude prices, and crackdown of Indian government on black money were considered to be major factors for crash. In 2018, the finance budget of the government was not liked by the market due to charging tax on long-term capital gain from shares. In the current year, due to a major pandemic, coronavirus, COVID-19, there is a global slowdown and the stock markets have corrected very heavily. Out of all these crashes, the current market crash of 2020 is the most frightening. If you compare it with the 2008 crash also, it seems to be worst. In 2008, from January to December, the overall market indices fall from 20,000 to 9,000, approx 55% in the whole year. The current decline in only 2 months is around 40% from 42,000 to 26,000. What should investors do in this current situation? It is the best time to choose good stocks for long term. Businesses are going to bounce back once we have the pandemic in control sooner or later. It will not be more than a year or two when we see positive gains from this market. Some sectors will even bounce back in a month because of the government bailout and support packages and good financial results due to the continued consumption in this situation, like FMCG sector, pharma sector, financial sector, etc. Let us see a chart which reflects the level of stock indices in a 5-year gap starting from 1990, and you can see that the markets have always bounced back in long term. This chart does not reflect the minute movements but only points the levels at 5-year mark. We can see that we have lost the last 5 years gains in 2 months, but also hope the recovery will also be very steep. Thank you for watching this video. Please like, share, subscribe and ask your questions in comments below.